Narrator: the market remembers. It remembers the soaring heights of the pandemic, the endless optimism, the belief that certain companies were invincible. But the market is also a cruel, efficient force. And in the last year, it has purged a list of once celebrated stocks, sending them into a free fall of 60% or more. Many have recovered, but a few remain in the wreckage, with the hope of a comeback still lingering in the air. The question now isn't what went wrong. The question is, what comes next? Narrator: consider Unity Software U. It was the backbone of the gaming world, a creative force, but a controversial pricing model and slowing revenue growth, a double whammy of a self-inflicted wound and a changing economy, sent its stock plummeting. Despite its recent volatility, with its stock trading near $33 and a 52-week low of about $14, there's a glimmer of hope. The profit-making opportunity here is for the patient and the strategic. It's a bet on management's ability to execute a perfect turnaround strategy. Can they mend fences with their developer community? Can their expansion into new industries finally prove its value? This isn't about the company's past, it's about its future. And that future is an uncertain but potentially lucrative bet. Narrator: then there's Peloton, PTON, the ultimate symbol of the homebound economy, a stock that seemed to defy gravity. But as the world reopened, its very reason for existence began to fade. The stock is down over 90% from its all-time high, trading around $6.77 with a 52-week low of approximately $2.83. The opportunity here is a high-risk gamble on a dramatic business pivot. Can Peloton transform from a luxury hardware company to a subscription-based software platform? Can new leadership in a new rebranding effort revive a once-beloved brand? This opportunity requires a strong belief that the company can cut costs, build new revenue streams, and prove that its brand loyalty is more than just a passing fad. Narrator: Beyond Meat, BYND, the once promising future of food, now a cautionary tale of a market that moved on. Down over 90%, the stock is trading around $4.28 with a 52-week low of about $2.23. The initial enthusiasm for plant-based alternatives has soured, and the company is struggling with competition and profitability, having reported a net loss of over $158 million in the last year. The profit-making opportunity is for those who are willing to bet on the company's ability to stage a miraculous comeback. Can they innovate their way out of this crisis? Can they lower costs enough to make their products appeal to a broader market? This is a speculative play on whether the company can finally find the recipe for sustained success. Narrator: Redfin, RDFN, the real estate market's disruptor, now a victim of its own success. A market slowdown and soaring interest rates have brutalized the stock, which is down over 90%. While it has recovered from its 52-week low of about $5.49 to a recent price around $11.19, it's still a long way from its all-time high of over $96.59. The profit-making opportunity is a long-term wager on a macroeconomic shift. Redfin's aggressive cost-cutting and consolidation efforts are a survival tactic for the current market. But if and when the Federal Reserve begins to cut interest rates, the housing market could roar back to life, and Redfin, now leaner and more efficient, could be perfectly positioned to capitalize on a new wave of home sales. Narrator: Rivian Automotive, RIVN, the next great electric vehicle contender, now facing a market that has little patience for production delays and cash burn. Down over 90% from its all-time high, the stock is trading around $14.02, though it has seen a recovery from its 52-week low of about $9.50. The opportunity here is a bet on execution. The company is still burning cash, with an EPS of negative $3.81. Can Rivian improve its manufacturing efficiency, manage its costs, and successfully launch new, more affordable models? The company has a strong brand and a loyal following, but in a market dominated by giants, this stock is a high-stakes play on whether it can deliver on its promises. Narrator: the pattern is clear. These are not just bad businesses, they are companies that failed to adapt to a rapidly changing world. Carvana, CVNA, a high-risk bet on surviving its debt, having shown some recovery. Roku, a gamble on a rebound in advertising spending, having recovered from its lows. Palantir, PLTR, a test of whether its accelerating growth can finally justify its once unimaginable valuation. having fully recovered and hit a new all-time high. In every downturn, there is a chance for a new beginning. The only question is which of these fallen giants has what it takes to rise again.